Happy Thursday, everyone. Hopefully, you all are geared up for another great and amazing day. Today's episode, it's going to be a little bit of a long one, so definitely grab some water, maybe some coffee, maybe some afternoon coffee, some evening coffee whenever you're watching today's video. As always, if you enjoy my content, definitely smash the like button, entirely free. Subscribe if you want to see more videos for myself and this YouTube channel. We have passed 200 subscribers. This channel is still relatively new. Let's get it to well over 1,000. So I know there's a lot of you all that do watch my videos but are not subscribed. Totally understand it. A lot of people subscribe to various other people, but I'm going to be making videos on this channel very much for a very, very long time, because I myself am not going to be leaving the market anytime soon, the stock market. I myself am not going to be kind of knocking on heaven's doors anytime soon. About to be 38 next week. So I'm rock and rolling right now, living the happiest and best days of my life, and I really do enjoy making videos for you all for education and motivation purposes. So as always, definitely drop a like if you can, and also think about subscribing for more videos. I might be uploading a bonus video on Saturday. I tend to put out videos Monday through Friday, but Saturday I'm probably going to do a bonus video, so definitely stay tuned for that. Okay, so I did get a little spiffy haircut. My barber actually got back from vacation. So I was actually getting a haircut at 2 p.m. yesterday. Right now it is 10:42 a.m. Eastern Standard Time. Yesterday I got done with my haircut literally as the FOMC meeting was starting. So I was actually in my car listening to the meeting. I'm going to go ahead and put this video link down below if you want to actually watch the entire meeting. 42 minutes, to be honest, it's pretty typical. Most Fed meetings tend to last between 35, 45 minutes-ish. I think one of Powell's interviews or meetings actually went for like a full-blown hour. That was back during, I believe, 2022 when the market was very much going down. So in today's video, I want to go ahead and talk about this, the good, the bad, maybe somewhat positive, maybe somewhat ugly. I also kind of really want to talk about this for a little bit too. Pretty much peace deal has been signed for the Middle East, all good stuff. Then I want to pretty much talk about the AI investor sentiment survey that came out yesterday. I really do like this survey, and I do want to go ahead and talk a little bit about it. I also then want to talk about the Fed Watch for upcoming predictions for the interest rates in the future. So let's go ahead and start with this. Oh, yes. And then I want to get into pretty much my public profile for this YouTube channel. Like I said, stay tuned because this video is probably going to be over 25 minutes long. I apologize if some of you all want shorter videos, but there's so much to talk about. It's very hard. Would you rather have maybe 2, 3 videos or one big one? A lot of people would just rather have one big video rather than like maybe 2, 3, like shorter videos, right? So the new Fed governor. What was my initial thought about him? How do I feel about this Fed governor? So, I've actually shown this quite a few times before. Talked about my history. Firstly and foremost, this is not my first time on YouTube. I have a main YouTube channel, NightmareRH. It's a gaming YouTube channel. My gaming viewers on my main channel that has 208,000 subscribers, they are not interested into the stock market because, hey, the stock market is a very scary and unpopular place. But as I stated, you gotta be getting into stuff that is very scary, that can very much expand your life to the upside. So when nobody wants to buy stocks, that tends to be when you should be buying stocks. When everyone wants to be buying stocks, it's time to really start maybe building a cash position, like Berkshire Hathaway, Warren Buffett, the OG, he has been doing for the last several years, because He pretty much saw that this was going to be crazy volatility. You could very well invest into kind of safe haven assets, but when there are scary things happening in the market, it tends to be the best time. But I totally understand it. The stock market, it is a very volatile game. It's not for everyone, but for those of us that do partake in the market, and for all of us that have been buying the dip, especially in the last 8 months, including myself, we are very much set up for a beautiful, beautiful end of the year. So my background on YouTube, been on YouTube for 18 plus years now, been making video game content. This channel is still relatively new when it's on the stock side. I got into the market 6 plus years ago when I was 31, right during Rona, March of 2020. I have a military background. I did 15 years, 6 months in the United States Marine Corps, ended up medically retiring, suffered a really bad gym injury on active duty, and pretty much went out November of 2022. I will say this. I cannot stand politics. I have met actually a lot of politicians, Republicans and Democrats, since I've been in. I'm also an Afghan vet, infantry Marine. And the politicians that I've met, Republicans and Democrats, they're all the friggin' same. Each and every single one of them. They're all the same. They talk the same. And I am just overly, really sick and tired of politicians, let alone politics. And I know a lot of people are too. This guy, Kevin Walsh, he sounds like a friggin' politician. And listening to the guy, it makes me not want to listen to him. I mean, oh boy, hopefully he doesn't see this video at all. But then again, I mean, hey, I'm an American. I believe in freedom of speech. If you don't like someone, hey, you're up to criticism. Especially, hey, criticize me. I've been criticized more times than you can imagine on YouTube in the last 18 years, let alone I've been criticized in person as well, too. Freedom of speech is number one. Should always be number one. Very, very important. This guy talks like a friggin' politician. Okay, so listening to him speak, it's very barrier orientated, which means if he doesn't want to answer a question, he'll go ahead and say, yeah, we have a task force that's being created. Go and ask the task force. And that's what politicians do. When you ask them a tough question, they deflect from that question. It drives me it drives me bonkers. Now, here's the bad. The bad is that a lot of people are really taking what he said into a very negative way, because what he wants to do is pretty much give us a lot less transparency of what the Federal Reserve is thinking or doing. If you go back in history before Rona and also before the Great Financial Crisis, the Federal Reserve was very much like not like all eyes on. The Federal Reserve came to rescue America, let alone the world, because this is just the simple fact. If America falls, the world is going to go through a very pivotal changing point. Like, imagine if China overtook the world as like the only superpower. What would that look like? Well, there would be a lot more surveillance, very much more communism type influence around the globe. Very much. So 2008, the Federal Reserve stepped in and they very much printed they gave bailouts, they saved banks, they saved businesses, they cut interest rates down to zero, and they were in the spotlight all the time. I was not in the market during 2008, but for a history lesson, the Federal Reserve was the spotlight. I also really wasn't paying attention to things, but if you asked anyone that was an investor, a trader, they would tell you that the Federal Reserve was everywhere. They were in the spotlight. Obama basically pretty much had the Federal Reserve by his side every which way that he turned. So, what Kevin Walsh wants to do is he wants to go ahead and make the Fed a lot less transparent, which a lot of people are saying is bad. But then again, if you look back in history, the Federal Reserve only really steps in when there is a real problem. 2008, there was a problem. 2022, there was a problem. Inflation is not near 10% like it was in 2022, okay? It's very different. The inflation right now that is happening is very much caused by geopolitical events. And looking at oil right now, if you see on the screen in the bottom right-hand corner, oil is $73 a barrel. It's very much trending down, which is very good, very bullish. But basically, in a nutshell, the bearish argument is that Kevin Walsh wants to create a bunch of task force, which he's going to do, and they're designing pretty much at reshaping how the Fed views inflation, because you can look at inflation in many different ways. And if you're new to the stock market, this might be a shell shocker to you, but you can calculate inflation many different ways. If you don't believe me, look it up on Google. You can go ahead and say, so keep it simple. Let's say you have an apple, an orange, some coffee, some real estate, and let's say 3 out of 4 of those items are normal. But one of those items are going up in price significantly, but 3 out of 4 are not. You could theoretically swap the item that is going up in price, aka inflation, with an item that's stable. Does that not seem like corrupt politics? It really does. That is the way the Federal Reserve calculates inflation. They can very well change the way they calculate inflation. I know this sounds like utterly crazy, but this is like what they do. Okay, this is the reason why I think maybe like they make it so the average person doesn't pay attention to this, because I think if the entire like population actually understood what goes on, they would say this is like the dumbest thing on the planet. He also wants to remove this thing called the dot plot system. So the way the Federal Reserve reads their data is by sending out survey. When I first learned about this stuff during 2022, I thought it was the dumbest thing on the planet. So the Federal Reserve, or rather our government, will go ahead and send out surveys to people, to citizens, people like you and me. And they will have you fill out a survey and say, hey, are you currently working? Yes or no? Are you receiving unemployment benefits? Yes or no? Are you searching for a job? That is how they calculate all these numbers that gets released every single month. He wants to move towards an AI automated system for real time. I actually think that's very bullish, okay? A lot of people are saying, well, removing the surveys, removing everything, isn't that going to be bearish? Why would it be bearish if it's going to give us real-time data? If anything, if we're getting real-time data, that pretty much means that we can make a decision a lot quicker. What if, hypothetically, we were getting real-time data and the last couple of months wasn't that bad as we thought it actually was? What if, theoretically, inflation can go up to 3.8, 4, maybe 4.5% and not really cause a problem? Now, do I think that 4.5% is not going to cause a problem? No. That is relatively high inflation. It does affect everything. But I'm just saying hypothetically. What if theoretically the Federal Reserve wants inflation to be at 2.0%? What if we don't need to be at 2.0% to really lower rates? And that's his argument. So that's a bullish notion. The guy really wants to take the Federal Reserve kind of really away from that. The Federal Reserve has to really save the market, because so many investors and so many traders, they're placing so many bets on what the Fed is doing that's not really how it should be. The way it should be in the market is what the fuck are these companies doing? Trying to keep it PG here, but I really can't. If you look at a company and if a company is showing extreme revenue growth, well, the company should be going up in their stock price, right? I mean, that's how Warren Buffett made all his money, by investing in profitable companies. So you really got to think about this at like face value of what Kevin Walsh is saying. He wants to take pretty much a lot of the outdated ways the Fed does calculations, and he wants to automate it. And then he also said we may not even do FOMC meetings, if we don't feel we need to. What does that mean? That tells you that, hey, stop like looking at us all the time. Like it's bullish. It's not bearish. It's really bullish. It's called getting back to the way things used to be. Getting back to how investing used to be for Warren Buffett. Getting back to the way that the market used to run before COVID, before the great financial crisis. And it really takes pressure off the Fed to make politically driven decisions. Now, here's another thing too. Kevin Walsh does have ties with the Trump family. So there are Republican Fed governors. There are Democrat Fed governors. Powell has actually been a lifelong Democrat. You can go ahead and look his background up. Kevin Walsh, it's very mixed reports, but if I had to take a guess on it, I would probably say he kind of leans to the Republican side. So politics do always matter. He's probably definitely going to do whatever it takes to get rates lower, but even Donald Trump knows that cutting rates right now would be very immature and also very politically driven, and that's not the way stuff is supposed to be ran. The reality about it is that we have a peace deal signed in the Middle East. Let's go ahead and hope all good things happen. I'll go ahead and link this video down below too. U.S. could resume strikes if Iran violates deal. There's a lot of really negative headlines, and a lot of the negative headlines, honestly, are coming from people that very much want the war to very much continue. I really don't. I very much want there to be no wars, because I can tell you, the Iraq war, I actually never went to Iraq. Like I said, Afghan vet. Also was deployed to a couple other countries as well, too. The Iraq war, that was utterly nonsense. The Afghan war lasted way too long. Service members died for nothing. Water, cheers. Talking about this stuff brings up kind of a painful amount of memories for me. I've had a lot of friends actually die in those wars, let alone post-war, because they couldn't handle the PTSD. So they killed themselves with either substance abuse or straight out murdered themselves. So yeah, those wars were very, very bad. But I myself, very, very much hoping and praying for good stuff. So let's all hope the same. AI investment survey, moving on to this part now. I'll go ahead and leave this link down below too. I really, really like this survey that gets sent out. Understand this is driven by algos, but also note that this survey is a little bit more accurate in my opinion. So obviously we see a swoosh of bullish sentiment very much starting back at the beginning of June. So at the beginning of June, you basically pretty much had the peace deal announced. And then the second week of June, it was some very hippity-jibbities, very bad vibes. Obviously, the sentiment turned to bearish. Now we're seeing the sentiment go back to being bullish, which is good. So I am always long-term bullish on America. America's stock market, I am always a long-term bull. I'm not a perma bull. A perma bull is when you are short-term bullish and also long-term bullish always. I'm really not. If you are just buying the major indexes, I can go ahead and understand that point. I actually know people that do just buy indexes, so they are short-term bullish and also long-term bullish, okay? I am not short-term bullish. I'm a realist because I invest in individual companies, so I am very much now, I want to say neutral, short-term, and I'm going to be slowly moving to that bullish by being short-term. I may actually pick up some options relatively soon. And the only time that I really do options is really when I am short-term bullish. So in the last 6 months, I was very much short-term bearish, long-term bullish, which is the reason why I bought close to $80,000 worth of stock in the last 7-8 months, is because obviously I'm buying very much for a longer time period. And shares don't expire like options. Very different, right? So this survey, very bullish. It's leaning towards being more bullish, which is always good. So 41 days out to the next Fed governor meeting. Holy smokes. Yeah, this video is definitely a longer one here. So let's go ahead and look at some of this stuff. Okay, 29 July. The market is seriously pricing in a friggin' rate hike. It's scary. It's very bearish. However, why are stocks somewhat a little green here? Maybe the market itself doesn't necessarily believe this, and that's overall the case. I mean, at the end of the day, we got 70%, so we got more than a 2/3 chance, or a 2/3 chance and some change, to basically not getting a rate cut. The Fed leaving rates for where they basically pretty much are. Now, we go out to the future. Yeah, you're talking about a rate hike. You're talking like, oh man, dude, it's pretty bad. So what can go ahead and change all this stuff? I'll go ahead and tell you. Data. Next month, when we get data where inflation and oil is lower, all this stuff is going to be changed. And I think that's why right now the market is very much recovering with very much green, especially interest rate sensitive stocks. And that is honestly why I personally believe that we have stocks very much like SoFi in the green. SoFi did very much drop drastically yesterday. We go back yesterday on SoFi. Let me pull up 5 minutes here. So each one of these candlesticks are 5 minutes. We go back yesterday. SoFi fell off a friggin' cliff yesterday. Yeah, it was pretty bad. SoFi was actually up by 5%. Then they ended up going into hurdle yesterday. Now we're somewhat seeing a farther drop. We're seeing a smooth recovery. Why is that? Because very much it's like, whoa, hey, yeah, we're seeing a lot of stuff price in rate hikes. What is going to take rate hikes off the table? Oil. Oil. This is what's going to take rate hikes off the table. We get rate hikes off the table. We got to very much have oil trend back down to $66 a barrel. Just wait until next month when we get new data. You're going to see inflation be significantly lower. Significantly lower. Okay? Each one of these candlesticks is 1 day. So obviously, you're talking before the Iran war started, oil was at $66 a barrel. Yeah. Imagine what the data is going to be for June. And then August, the data is even going to be better because oil is going to be lower. Maybe come time friggin' August, I mean, like, imagine next month if oil is going to be below $66 a barrel, below $60 a barrel. The market's going to be then pricing in, hey, we're going to not get any rate hikes, okay? It's going to be a lot better. So that's really why I think a lot of these interest rate sensitive stocks are somewhat like being stable and recovering right now. Obviously the semis are very much pushing like higher. You got AMD rock and rolling. Nvidia is up 2% here. A lot of very, SpaceX is definitely getting a pullback right now. Software is getting utterly destroyed. I do want to talk about software really quick and do want to go over, some stuff here on my public profile. If you are new here, like I said, welcome. I'm doing a public profile challenge, looking to take this account to 6 figures in the course of 17 months, which is going to be May of next year. This account challenge started 2 January this year, and this account challenge is just soaring to new all-time highs here, left and right. A couple weeks ago, Robinhood was down by 20% on this account. Pretty crazy, right? Adobe. So software. ServiceNow was actually very up on this profile a little over a week ago by over 20%. So I'm getting to the point. Okay, so firstly, what is happening with Adobe? Adobe, I really should be making a separate video on this, but in a nutshell, the CEO is leaving and the CFO. You have a new management team coming in. The thing about Adobe is that I'm getting to my point where it's going to soon be cutting losses. And I'm going to be cutting losses maybe by doing it in allotments. That's personally how I take losses on stocks. But it goes to show you the power of picking winners. AMD is a clear winner. SoFi is a winner. Hood is a winner. Just going off of AMD, SoFi, Hood, I make up losses on Adobe. Palantir is very much getting wrecked, but then again, all the software is right now. And the reason why all the software is getting wrecked is primarily because money is still being sucked out of software to go into hardware. Okay? You have people selling out of Adobe. You have people selling out of Microsoft still. You have people selling out of Salesforce, CRM. You have people selling out of friggin' ServiceNow. And you also have Nvidia. You have the chips going up. There's going to be a time where it flips, but if a stock gets beaten down too much, it's really dead money. And you may not get back your losses for a significant amount of time. So Adobe has broken a very key psychological level, which is $200. I mean, by all means, Adobe just ended up dropping some not terrible news here. But I mean, on the charts, this stock is very much in a, it's very much in a crash. There's no other way to really put it here. Expands creative AI agent across. I mean, this is all very bullish. If you read all these articles that are coming out, it's very bullish. But there is so much drama right now around the management team that Adobe is being compared to PayPal, Salesforce, and also ServiceNow. There's not drama within the management team. PayPal has drama in the management team. Adobe does not. So if I were to sell some shares of Adobe, I would roll that money definitely into ServiceNow, which I'm really considering. I really want to see just very much if software gets a pretty nice bounce here in the next couple days as a recovery, because we're really just seeing a software drawdown. If not, then yeah, I'm definitely going to be scaling out. Obviously, you're never going to be 100% right. And understand that if you are a disciplined investor and trader, you're going to have casualties. Okay? If you don't have casualties, one, well, you must be God, because even Warren Buffett has had casualties, okay? Like, it's no one can, you're going to experience losses. But it's all about doing your due diligence and risk management and understanding, hey, you got a company that's going on a growth cycle, AMD, it's better to go heavier in that company. Adobe is not going on a growth cycle. Adobe is just beaten down because of software, and the company's growing year over year by 14%. You got AMD putting up a CAGR, compound annual growth rate, of 30+%. You got SoFi, 30+%. Hood is a risk-on company, and when it's a risk-on company, their growth rates are just absurd. Those are the plays. Obviously, Adobe for me, I honestly thought Adobe was going to be pretty much a safe haven software company. I guess maybe Microsoft was a better safe haven company, right? So I definitely want exposure to software, but I will say I got to start taking some losses relatively soon, because the bleed on Adobe, man, it's when it comes to technical analysis, we are over on the daily chart. We are oversold on Adobe, so that's partially why I have not taken losses just yet, is because I want to see if we get a bounce. I really do want to see if Adobe gets a bounce, maybe to 210, maybe 200. We obviously had a gap on the chart from 220-ish. If we get a good bounce to $220 and I recover a little bit more, hey, me personally, I'm gonna be exiting the door. So understand at the end of the day, that's what I'm doing. But if you are setting up a strategy, this is how you gotta really think and come up with your game plan. If you are encountering a loss, a hard stop, and for me, there are some stocks that I am willing to be down 35% in. Adobe, because there is management team drama, I'm not really willing to be in a stock down by 35% when there is management team drama. Robinhood was actually down by 27%. I think at one time, almost 30% for me. I was buying more shares. Why? Because the friggin' CEO was out there saying, hey, we're going to be doing great things. Don't worry about this drawdown. Okay, Vad, I believe you. Adobe CEO is leaving. Big difference, right? Part of me does want to stick around for Adobe because I do want to see if the new CEO is going to do something for the company. But at the same time, it's a little scary too. Okay, I've really ranted and raved too much. Sorry for the longer video, everyone. I know a lot of you enjoy longer videos. Stay motivated. If you are in the same situation as me with a different stock, when you got to cut losses, understand that there are discounts everywhere in this market right now, and you can always roll money into very much phenomenal companies. You can't be scared to take a loss. It sucks, but hey, you got to know when to cut the cord. All right, later, everyone.